Hey, welcome back to the Mining Pod. On today's show, we are joined by Michael Carter, aka BitsBeTrippin. He's a popular crypto mining YouTuber and also an OG Bitcoin miner. Typically bring Michael on at the beginning of the year to do a forecast for 2025, and that's what we did here. We ended up talking a lot about his own mining operations. He runs some joint ventures, and then he also works on behalf of other miners to kind of set up their operations. Really interesting conversation around the things that Bitcoin miners have to deal with on a local basis. So we kind of start off with that at the top of the show. And then we got into some conversations around what the market's going to look like in 2025, including energy, investments into mining, and then also ASICs. So stick around for that and more. If you're enjoying the show, please check out our newsletter. Go to newsletter.blockspace.media.com or just go to blockspace.media. You can find a link in the show notes. We now have 3 different newsletter items per week put there. It's quickly growing. We're almost at 7,000 subscribers. So it's a great place to catch up with all things in the Bitcoin and Bitcoin mining industries 3 times per week. Okay, let's jump into the conversation after a word from our sponsors.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Thanks for listening to the Mining Pod. Want more? Subscribe to our main feed on Apple, Spotify, YouTube, or wherever else you get your podcasts for another weekly show on Bitcoin stocks. And check out our newsletter at miningpod.blockspace.media today.
Hey, welcome back to Mining Pod. We got our yearly roundup with BitsBeTrippin, aka Michael Carter. I guess I did that a little backwards, but that's okay. Michael, how you doing today, man?
Doing great, man. Doing good. We're actually getting 1 to 4 inches of snow today on top of the close to 14 that we got here in the St. Louis area.
You guys have 14 inches?
Yeah, we did on Sunday night through essentially Tuesday this week. It almost shut everything down here in the St. Louis area.
Yeah.
It was pretty bad. I mean, it was the whole Midwest from like essentially Kansas City over to the Ohio Valley got a ton of snow. And I think Atlanta just got hit with some inches of snow too. So it's pretty mess around here, but we're still mining.
Yeah, I mean the miners keep the snow away. We went to the Broncos Kansas City Chiefs game on Sunday. The Chiefs almost didn't make it there because of the really terrible conditions out there.
Yep.
So that makes sense. We got a few inches here, not too bad. But in Colorado, we like more snow, not less. It's ideal for us.
Yeah.
Well, for those who are just kind of tuning in and don't follow the Mining Pod a ton, and those who've listened for quite a while, we try to have the BitsBeTrippin team on once a year to kind of kick off things for the new year. Michael, you've been mining Bitcoin since like forever.
Late 2010. So.
Yes. So OG in the space. I think like the godfather of mining in a lot of ways for people, especially the YouTube crowd. So we love having you on, and people go check out his YouTube channel. They have some amazing content, especially right now as you guys are building your new mines out for clients and for yourselves. So I think that's what we're going to talk about today. That wasn't the initial idea for the conversation, but I think it's just like a little more interesting to go through what you guys are up to.
Yeah. So this year's already kicking off pretty strong. I mean, obviously we have a pro crypto administration coming in right now. At least I've claimed pro crypto. I've went and been part of a lot of the local, things around here and around, going to the various conferences, with the administration and stuff. So it's spurred a new interest, I would say, in mining development on areas that have pretty decent power cost. And in our particular area here in Southern Illinois, we've established some pretty good pricing rates due to a lot of the stranded energy that's here from like windmill overproduction of that stuff and just the demand from there. So it's just been a lot of, consulting calls and just essentially laying out new mines. And we do share most of that as much as we can on X, usually daily through daily vlogs, kind of what the ops tempo is here, just to give people some exposure from that kind of, I would say, small to medium size mining farms. So we've done everything from 750 kVA, 750,000 watt farms, which is like a single 20-foot container, all the way up to some of the larger sites, 40 plus megawatts that we have with the joint venture. So in total, between the joint ventures and the stuff that we have footprint wise, we're around 97 megawatts with another potential 45 coming online down in Texas. And then we have almost 20 megawatts this year already earmarked on 5 megawatt locations, essentially 4 of those in 1.5 megawatt location that we're actually actively building out. So some in various stages. We'll get into one of them specifically because we're kind of right at that acceptance from the community level. But yeah, it's quite a bit this year.
Yeah, I mean the smaller miner stuff, like that's a good constituency of our audience is people who are, building private mines maybe for the first time. Maybe they're investors in private mines and they're trying to make sure that their check is being stewarded properly. And then there's of course people who have been operating for a while, just trying to get that new edge. Of course, we have the spectators as well. And we love the spectators. Maybe have invested in Bitcoin mining stocks and they're just interested in how these things go. I like these private shows though, because I think it is like the heart and soul of the mining pod where we get to talk with operators. So normally we would go through kind of 2024 stuff and 2025 stuff, but you have a good story, good anecdote from last night, a city council meeting we were talking about before the recording. So we're pivoting last minute and we're going to talk about that for a little bit. Tell me about this maybe hair pulling moment you experienced.
Yeah. So I'll give you a little quick context. So most of the sites that we build and we usually target are rural. So they're not necessarily in a particular city or a municipality. They're usually special use permits on like ag land, especially in the Midwest, that is next to a substation that will either have annexed or have just as a special use and can build a mining farm out, really not near anybody, right? This particular case, we're within the city bounds, and it's a small city, and effectively they have zoning and planning commissions and things you have to go through for particular plots of land that you would purchase in there to make sure that you can build what you're asking to build. And in this particular case, the city doesn't have any kind of Bitcoin miners there, so we had to first in October present just what a Bitcoin mine is, like what are the details around it, what's a building look like, what's if we're going to do a container solution, what's that look like. And then, from cities, and it wasn't really apparent to us at the time when they were asking us back in October of, what kind of money does this generate for a city? Because cities have economic plans with the plots that they lay out, if it's commercial or industrial, as an example. Well, fast forward to last night, we had originally started the conversations in October, kind of worked with the city to get all the permitting stuff requested. And then we're going through essentially the approvals of that. And while we passed all of the requirements related to the building and the specifications of this is going to be a warehouse, it's going to be a 5 megawatt building, roughly 60 by 120. We had purchased land in what they call I2 zone, which is an industrial zone office park. So it's already a pre-constructed office park. It's been sitting there for about 10 years. There's a few plots left in it. And this particular plot is next to a concrete company. So there's, it's not the one that most people are going to choose because it's next to, a loud and kind of dusty concrete company. And, the rate was decent for it. So the land was picked up, and then we were just going to go pull permits, right? Because you look at it, you can put a warehouse there. There's a lot of electricity around the area. Well, we went through that meeting yesterday, and effectively 3 things came up. They're like, hey, we still want a sound report of something that's like this, even though the zoning says that essentially anything over 90 decibels after 50 feet from the premises is you have to have some kind of like, survey or something that done on how you're going to mitigate that. Now, anybody that's around Bitcoin mining knows that if you have a container, let's say, and you're setting in the hot lane, which is where most of the exhaust is coming, you're around 97 decibels. Like we've have many videos that show that, the different decibel counts around there with our own meters. Plus we've also commissioned and paid for, sound surveys at some of our sites just to help a community understand the sound impacts. Well, in building a 60 by 100 building, if you're at the edges of the building, even with the louvers, you're going to be about 53 to 57 decibels. Like if you just stand there with a because it's being insulated by the building. Only the louvers is really where a lot of the sound's coming out of. So it's well within specifications, but they still had concern about that. So we like, hey, can you bring back something like for like on the next meeting, which is in 2 weeks? No problem, can do that. The second one was they were concerned about the power usage on the substation and that we would be consuming so much power that it would create an unknown cost burden on anybody else building in that area. Mm-hmm. And so what they wanted to hear is really from the utility company is that, hey, let's qualm those fears. They've accounted for this in part of their study. And what's available? What else is available? And is this really impacting in kind of cost? And it gave us a new perspective of the thinking and asking other utilities of like, are we going to create any kind of unknown cost burden on somebody else that comes into this area because we've used all of it up? So I think it's a good due diligence to have that anyways. Luckily for us, the local power company CEO is going to show up at this meeting. So on the 21st. So that's when we're going to do this next one. The last one kind of caught me off guard, and this is one we'll spend a little bit of time on.
This is the one that was like probably speak to you a little bit, just as an entrepreneur.
Am I in the U.S. or is this so the way it was presented was there was a debate in front of us with the council that was concerned that this would not be the best use of the land. Mind you, we bought the land already. Mm-hmm. And so they're deliberating about if the use of this land is actually good for that because the city may not generate enough tax revenue from it. So they're literally telling us, well, we don't think you're going to make enough money for us, so we won't approve this. I mean, that's effectively what was said. And it's not me putting words in their mouth. This is literally how it came out. And so I was very concerned. I was like, wait a minute, we didn't grease the skids and you guys are not now going to approve this? Like, how does this work? Like, we met all the requirements. We're going to answer the mail on these other two things. But like, I can't, like, there's a lot of situations when you start looking at like economic incentives for a city that I was made aware of after this meeting that, they usually will only have so many plots of land that has been zoned appropriately against residential or agricultural land, and especially in the Midwest, that there's only so many plots that have commercial and industrial locations. And then they build a revenue plan to bring taxes in for the city and be able to do stuff. So I totally understand that aspect. That's not how it was presented, unfortunately. But it does give a question of like, as a Bitcoin miner, we're purchasing property, we're building a building, which will be a benefit to the local community, at least for a short time, because we're going to be using local contractors. We'll source a lot of the material locally. We're not pulling stuff from wherever. Copper wire will come from the local guy, right? Type of thing. All the concrete company, literally we're next to the concrete company. Our neighbor is going to service our concrete. So like we're having to build a case, an economic case of why it's a positive thing. Of any kind of development in any city should be a positive thing, right? And we're going to build a warehouse. We bought a piece of land that's been sitting there for 10 years. So there's already positive economic impact. But I think the unfortunate thing for us is we came in inheriting that we thought, this wasn't ever a question, right? Like we purchased this land, we're just asking for a permit. And I think the lesson here for everybody or anybody building out any kind of location is understand the economics in the area and see that you may get pushback if that particular plot of land isn't going to be developed in the way they thought from their economic incentives. We're going to be done. And then how can you best express that to show, well, actually, local people are going to be hired. We're going to use the local unions. Like there is a net positive, even for a short period of time. And we're going to hire one other individual, an FTE, a single FTE that will maintain that site remotely. Those are like important things for cities. Like why it might not be the number one thing for us because we're trying to build a building and get it sourced and all that kind of stuff. It isn't for the city's perspective. And it was just an enlightening, I think in the presentation of it, they just didn't communicate it well, but it gave us a second to step back and say, how can we be a positive force in the community in some way? Can we use the extra land? I mean, this is a 2-acre plot and we're going to have like a 1/4 acre used. So maybe we can use some of this other land for other things, but it does get in that kind of like, you know, at what point am I giving them a take, you know, like, and is that,
well, you
is
just
that
don't
how
expect
it works?
That. You know, you don't expect like a government body to step in and be like deciding what's beneficial from an economic perspective. That's un-American, but
on your own property, right?
Yeah, like you own the property and there's some arbitrary council that's deciding things, and like it's just not American. And a lot of Bitcoin miners have to face this. So I'm curious, from your perspective, what is the best way to go about this? Like, what's your game plan? I'm not saying this is the preferred way of doing it, but like, what's your next steps to handle this?
First off, we did this last night. We kind of just laid out, actually on this whiteboard behind us, we laid out some very basic facts. We said, okay, what are the facts that we know that will generate tax revenue or benefits away from the initial like CapEx investment to build, right? Because as far as they're looking at that's just a quick spike locally, great. Each of those businesses will pay their sales tax or whatever, right? But after that, what's can occur? And so we looked at what's the billing look like, right? What's the utility bills? What portion of that goes there? Property taxes, right? So right now we're going through the due diligence of understanding more thoroughly when we pay, like, let's say utility tax. And for anybody, so we're going to be around 4.1 cent all in for this site to give you an idea from a power cost standpoint. We have to meet a curtailment coincidental peak. If we don't hit that, then we're roughly about 5.2 cents, just to give you an idea of range. So that 5 megawatts, if you're averaging around 4.8 of usage, in reality is about $133,000 to $170,000 a month in power cost at that 4.1 to 5.2 range with that much consumption, with our demand charges and everything that's there. So in that, the bill, and we know this because we have other sites that are 5 meg, and it's going to be in the same category of billing. So we can extrapolate on all the bills. We pulled all the bills that we have on one of the sites for the last 30 months, and we looked at what the average taxes that were paid on each bill. And it was anywhere between $7,300 to $9,000, depending if we made the curtailments or not. So it's in that of what percentage of that sales tax goes to the local municipality. So they do separate some of that. And we're peeling that back now. We think it's somewhere around $1,000 to $1,500 a month is where right now, just using Grok and ChatGPT, like, hey, can you look at Illinois and look at how this breaks down? So we're going to get a validation of that. And then what we're going to do is present on the next council of like, hey, actually, the city is benefiting, and we're taking a couple not like businesses, but we're taking a couple other small businesses that are about the same footprint, at least from just a size of like the building versus something else, and then what they would genuinely pay for their stuff. So if I take like a barbershop, or I take some other thing that has not a huge amount of volume, but they are people pay sales tax at, like as a barbershop in general, they would pay around $1,000 to $1,500 a month in the city tax in our area anyways. Ice cream shop, a couple other things we're looking at that we're actually going to end up paying more, right? So we're going to show just, hey, you're not getting no benefit from this. We're actually like another business. Now, we're not going to be like an Amazon warehouse or something that's going to use up 2 full acres, and you're going to get this other, like a retail store, right? Because you're going to be paying all kinds of retail tax. But that's not our business, and we shouldn't be penalized on because not all business, like there's a business, if you had like an eBay store business or something like that, and everything is going outside of Illinois and you're not paying any local tax, they're not, that tax isn't going to the city, right? It may just go into the state of Illinois and the federal government. That's it. Nothing's going to the city in that. So there's lots of instances. So what we're going to try to do is just so, hey, from our understanding and our research in this past week, here's the types of businesses that pay you revenue. Here's the types of businesses that don't, that are here in town. And then here's our business that you're going to get part of the utility bill. Yeah. So we're just trying to create the case that they are getting a benefit. And along with that, because we're covering it, and this is our particular situation because BBT's covered it. I'm going to be vlogging it, and I'm going to be talking about. I don't want to say we're not worried about the OPSEC of the location itself, but the client and us both are like, let's share this to the community. So like the town that it's in, all that stuff is going to be shared as part of our vlog. So it is kind of a net positive for the city to get exposure of just, how good, because normally everything else, the city's been great, right? I've had no problems with the area. So like, and it's a metropolitan St. Louis, local city. So it's like, shouting out them as like, hey, come build, is a net positive thing for them too. So and in general, the community's been good. So that's kind of our strategy. Just show them real numbers along with like for like, and then just give it a whirl. I mean, I think we should be able to answer the mail on that, but like it's
do you think there's like an anti-Bitcoin thing here on any of the city council at all? But not really.
There's a few people. So there's 2 cycles to it. There's 8 people that are part of the initial recommendation body. And then that goes to the council, which is like the mayor and the aldermans and all that. And that's a separate, different 8 people. And you really just need a majority of those folks. And, we're cautiously optimistic that a majority of them are net positive. They're okay with it. They, the time that we introduced this to everybody in October, they came over, we're asking about how do they set up like Coinbase accounts and stuff. So I think it was a net positive. Also, we do have a part of that presentation that we're going to explain just the political landscape right now with Bitcoin in general, with, potentially becoming a U.S. reserve currency. It's part of critical infrastructure. Like this is a net positive to show a community that's embracing it more than a negative, right? Like you're going against kind of the momentum if you're pushing back against it. And we're not going to win everybody over. Some folks are just, they still pay their bills with checks, right? They're not Cash App and they're not using smartphones. And most of at least the city councils around us are kind of that, the older age group that's just not really, even though we've explained Bitcoin to them a few times, they just really are not, I don't say they care, but they're just not going to bend over backwards to help us in that particular way. But there is a handful of folks that do understand that, hey, this is kind of the future. There is, and then some that are very pro, like all in, like mining, they're doing, they see the advantage from like the local co-op. Of like the more they put online, it buys down the residential rate here because they're a nonprofit co-op. So if they're getting better power deals from the larger entities, like a lot of the power around here, the energy mix is 56% wind power here, and then base load makes up essentially the rest. So we have natural gas, nuclear, and coal. So those are the kind of core, but a huge amount of wind in Illinois. So like the power company says, we can actually get some energy arbitrages here if we're buying into another classification of amount, right? So there's some pretty large interconnects here, so we could really increase their footprint, and then that buys down the local electric rate, right? Because then they have a more guarantee of power costs and don't have to, really predict peaks and the times that they're just, you could be 6-cent power, right? And so we're trying to build that case and that story and get the estimations from the power company to see at what point does it move the needle enough to where we can start to see a ratcheting down on residential rates, because the Bitcoin miners are the majority. Like right now, BBT in our area of what we handle, what we own either through a joint venture or partial ownership and or just clients in totality, we use more power in the Metro East St. Louis area than anybody else. So we are now the largest in this area collectively. And we have a steel plant here, a steel mill plant here. US Steel has a smelter here. So like when you look at it, because of their peaks and their shutdowns, we're cumulatively using more, which is helping, reduce some of those rates. And again, like power usage, like there's a lot of stigma around it. Well, is too much power usage bad? And, there's like this is like an eon of an argument of like, it will go on forever of like good power versus bad power or whatever. But at the end of the day, consumption of that energy and helping economically, I think is what really is people are going to care about.
Yeah.
With considering that, like our coal percentage is very low. It's less than 11% in this particular area. So it's not, a lot of it's renewables anyway. So all the folks that are concerned heavily around climate and stuff like that are addressed.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
I mean, it's an interesting problem that a lot of Bitcoin miners have. I mean, I've talked to PubGo execs who have to handle this stuff. The Riot one is the one that comes to mind immediately, where they've had this whole grouping both in like the Rocktail area and then most recently, of course, Corsicana coming after them to build their new data campus there. And it's not to say that there isn't like issues with these data campuses, but they have a decent track record if they're public companies of handling these things. The private miners, there has been some instances and there's been reports. There's a big one on CNN like 2 years ago, I remember, where a private miner bought a plot of land right next to someone's house, threw up a Bitcoin mine, super loud. That'd be awful. And so you get some of those headlines. But
yeah, you gotta consider, like, all the areas that we're looking at aren't near people. Like, nobody wants to hear the thing, right? At the end of the day, it's a product of air cooled mining, and there's a lot of transition to immersion and water cooled mining. And in some areas, like in our particular thing, like if we were near any kind of residence, like when we talk to our potential clients too, of like if you have a spot and the energy rate makes sense, it's like immediately we start drawing lines to where's the nearest house. Is there potential for a house to be built in this area? Is it zoned residential near it? And then we just say, hey, if you're going to do this or you want to do this, you're going to have to go immersion or water cool just to reduce your noise footprint. To be considerate of that, because nobody wants to just constantly hear that. That is like going to be like torture for some people. So, you got to think about those things, but like, it's the same thing that we try to communicate at these meetings with regards to the power usage, to kind of go back to like the consumption side. Like we consider ourselves not a necessity. So that's why we will curtail. We will curtail both for economic and financial reasons, because it just makes sense to, but also if there's emergencies, if the power, like we're having like a snow event here right now, and curtailing later today, like we're going to give the power back to the grid and keep, them being able to manage, the grid power. And in this area, we have 27 megawatts as an example. So it's like, the Metro East doesn't have a huge amount of consumption, short of whenever the steel mill fires up, right? So I think it's the right due diligent thing to do for a community when they need it, is to give that power back anyway. So like, I think it's just being a good steward and be considerate of that.
Let's pivot over to talk about some 2024, 2025 stuff. So what I want to go through is ASICs, investor money, energy, and then thoughts on pubcos. And that kind of covers, most things in mining, and we can talk about for this last year and this year. Maybe we should start with the investor money. So that's obviously the top of the stack. Beginning of last year, the market was pumping. We broke past 60K. People were super excited, but hash price was still pretty depressed. I get the sense that raising money for miners was still pretty difficult unless you're public. And then into the end of the year seems to be sentiment stronger. But what has been your perception of it since you do a bunch of private sort of stuff, either with clients or JVs or other things?
Yeah, so it's typically when we go to sit down with somebody, or if it's somebody that has a part to start, a mine themselves, but they're going to try to raise for other, we immediately go right into a model. So we have a pretty sophisticated model that goes out and looks at the history of Bitcoin difficulty. And essentially we measure it against both the hash, the current hash rate daily, and then what the difficulty adjustments were, right? To give us a forecast on a pro forma all the way out like 10 years. And we take that, we have two anchors essentially in our model. That one anchor is what's occurred when you look at the data is when you get in around hash price that you start seeing just below 6 cents, that 6 cents, difficulty almost every time. And anybody that does analysis on this can go and fact check me here. When you get around 5 cents all in pricing just for the electric rate, Bitcoin mining by and large starts to reduce difficulty. It's just, and I think it's the product of the reality of some of the larger entities that are out there that take up, exahashes of stuff. They cannot operate because they cost, I don't care if their energy rate's 3.9, 4.2, whatever. They have a little more overhead than most smaller shops. And at scale, they either have to go borrow more capital to keep running, or they power down, or they power way down, right? So it starts to ratchet difficulty down. So we see that. So in our models, we look at that at 4 cents as a hard line. No matter what, if you're not profitable at a relatively median, I put 24 joules per T in there. If you're at 24 joules per T and you're at 4 cents, if you're not profitable, that difficulty is adjusting down. So that's the forward aggregation that we put into our model.
Yeah.
And then that gives you kind of this basis of like, okay, now I know the hard line, or at least a relative forecast of a hard line from Bitcoin difficulty going up. So then what's price, right? So you're tracking price. And if you have a high, medium, or low price in your forecast, meaning like if I'm flat, what current price is, pull that out a year. If I'm down 10%, 20% on a relatively medium, you're just going to see difficulty ratchet down with that, holding that 4 cent all in price. And then a high side would be kind of I don't want to call it hopium. Like I'll give you an idea. Like last January, our model showed medium case 105 at the end of the year. It almost nailed it. And no, it's just the aggregation that we had in there. That's what we came up from a forecast that we had 105,000 in there. Our model this year has 175 as the median. So at the end of this year, that's price forecast, BitsBeTrippin, first of the year. We think that it'd be at around 175 by December. That's on our medium case, right? Our low case, we have it essentially flat all the way through the year. It bounces between 97 to 103 all the way to the end of the year. The high side case, I have it at 225. So what we do is we look at that and we try to work with customers to say, what is going to be your rate of return based on your investment? And then that gives you the basis of what kind of CapEx you're going to need. And then if somebody wants to partake with that, is it 8, 10% for capital, maybe 14% for capital? What's that look in a 5-year pro forma, and what's your IRR on that, your initial rate of return? So that's kind of the baseline with any kind of capital stuff that we talk with anybody. Now, some people may just have the capital and just want to, make the purchase and then have some depreciation because maybe they have other things going on. I'm going to tell you, though, a few folks that we have set up are that way, where they have other businesses and they're looking at a different set of calculus where they don't want to be unprofitable, but they're not super scared about thin margins to also partake, right? So they're looking at, I can depreciate, machines over time. I'm stacking Bitcoin the whole time. I'll hedge and pay for some of the power on some of that cost. So they're looking at it at like a 12-month span to where they're going to hold 35, 40% of Bitcoin. And they're getting it incrementally, just like a dollar cost average type of thing. Now, some people would argue you could just dollar cost average with all that CapEx and probably come out better. That is a strategy. But if you would have done that strategy back in 21, you would have had to wait till 24 for it to really work out, right? So like it's because you could have it going all the way down, and then now your capital, I would call it quote unquote locked up. That's the part I don't think people buying into Bitcoin really like if they're just buying and not hedging on machines and equipment and all the other stuff, the moment they're buying and as on a bearish market trend, they're in, and they're I don't want to say they're stuck in, but they're not going to want to sell any of that stack or exercise any of those options in a declining market. They're just going to keep stacking sats. And then at some point, they're going to get to where they can get some rate of return on some of their capital if they need to go do other things, right? Where at least in the mining aspect, you're borrowing capital at a cost, you're mining and earning Bitcoin, but you're also able to depreciate some of those assets and help you if you have other ancillary businesses, right? So there is a way to do that. And we've done this with folks that want to do a single 20-foot container, 750 kVA, because it's not a huge expense relative. You put 206 new miners in there at $4,500. It's it's $1 million, right? So there is some cost to that, but like that's the reality from like a small entry into it. Bitmain N5 V2 can hold 206 ASICs. Let's say your average price on an ASIC is $2,500. If you're getting something like a XP or something like that, then you can kind of amortize that over that 5-year plan and understand like what you can appreciate and stuff. So I know it's kind of a long way of saying that there's some strategies to figure out what your situation is. If you're a business owner and you want to partake in this, there's different plays that are there. And then if you're trying to borrow or raise capital, you really need to have a solid model. And some folks just call us and just say, hey, we just want the model. That's it. And we'll do that. And they do their own due diligence. But you need a good model to go and raise capital that can tell the story of the good, the bad, and the ugly of what happens in your area versus your power rate. What are you going to do to address that?
It's funny you bring up the difficulty part, because that's the thing that we've seen a lot of criticism for in the banking reports regarding pubcos, where difficulty and hash rate over a year-long period, there's just some baked in assumptions, probably just doing like cycle over cycle. They're probably maybe annualizing it and taking into consideration years far back, but difficulty is kind of a different beast recently.
Yeah. Well, I mean, I see that. I mean, I've talked with several banks. I mean, we've went on consulting things with banks. Like, I mean, years ago I did Wells Fargo. I've done a few banks just to let them understand the economics, because it was really from is the banking going to get into mining? No, but they have people coming to them that are very well capitalized, have good capital assets, and are trying to get a line of credit for this. And then the banks are like, hey man, we've known you guys forever, but we just don't have enough data on this. So part of it is, the banks reaching out and going, how do you guys measure? What's the rubrics that we can look at and at least get some kind of semblance that is, I call it a swag, a scientific wild ass guess, right? So what's the swag? Well, the swag is what's true and finite in Bitcoin when it comes to like the mechanics of it. And then what's the reality that's happened in history? Not saying the history dictates future, that's on price. Difficulty is mechanical, right? So like what happens mechanically to difficulty when Bitcoin's price gets to such a point that hash rate output starts to get extremely low. And the reality is there's like, you could almost draw a line, hard lines at that, like 5.5 cent, 5 cent all in pricing, price per kilowatt. And you just see difficulty just hard stop and start to go down because people are shutting off. That's the reality of it. So you got to have that line somewhere. I think in the future state, as pricing of power kind of evolves, these micro nuclear facilities, they're talking in 2030, you can get maybe large actors that can get these energy sources at a much cheaper rate. And then you're going to start to see a gravitation, I think, to race to the bottom on energy. And that will change that dichotomy of like, how do you measure where difficulty is going to stop moving up? Because it will stop moving up. Like it'll go to a point until you're just unprofitable at a certain rate. And then you're just torching cash. A pubco is going to spend way more money than a small guy because they just have all the reporting requirements and everything else. So at some point, there's some other economic games to be played with it. And what I mean by that is if you have a strong footprint of power obligation, and we're seeing this already, they're cross hedging into other artificial intelligent data centers. Most of these sites that have lots of earmarked power can leverage the footprint to say, hey, we bought 50 acres, put a data center here, right? And use part of that cost and be able to sell the kilowatt per hour at a much higher rate, and then kind of offset your mining operation some. So I think we're going to see some transitional combining. I almost think of it like this is kind of a nerd way to think about it from like myself. Like this is kind of like a dual mining thing. Like if you have like Doge and Litecoin for the ASIC miner, right? For the script miner, like you're getting 2 for 1. Like if you have a site with a lot of power, you can start to cross hedge some of that through another business that requires lots of power. And then it like lets you continue to mine, with your mining operation. And I mean, that, and then you got all these newer ASICs that we can maybe get into, that are hitting that 3 nanometer architecture, and you're starting to see, sub 15 joules per T actually at meter level, not just marketing.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Yeah, no, I definitely want to get into the new ASICs because the ASIC market is changing quite a bit. I'm interested from a private market side, what people are purchasing. One last thought on this before we do that is the amount of capital coming from pubcos and how it's distorting stuff for everyone in the private side of things. And Miner Mag has done some really good research on this. I think it's over $4 billion has been raised and kind of placed into the mining market from U.S. capital markets. These are like the convertible notes that Mara and CleanSpark and Riot are doing. A lot of times they're buying Bitcoin, but not always buying Bitcoin. And these are the ATMs. We're recording this morning, and Mara just announced that it's going to open up, I think, another 300 million shares into like its general classification of securities, which is going to be used for probably mining more Bitcoin. So that makes things a little harder for private guys when you're trying to make that investment. But I'll just note like that 4-cent rule, and just like know where difficulty is going, have some different ideas for the ASIC market. Any thoughts on like old class, new class? I feel like Canaan's kind of making a little bit of a comeback right now. Any thoughts on it? Yeah,
I just actually commented on one of the X posts I saw when I think it was Austin Barnhill that said that he was very happy with the longevity of the Canon machines that they have. And I responded to that and seconded it. I mean, we've had some Canon 1246s running for 30 plus months. I've never touched them once, right? They just have been rock stars. The fans are still working. Power supply is still working, 277 voltages. I mean, it's like they've had such a good, just longevity of not having to touch them compared to like a lot of the Bitmain stuff that we have to always update and replace. I'm really excited to see their 1566s. On one of our joint ventures, we're actually picking up some. We're going to do about 405 of the new 1566s at a site. So we're kind of split housing it as it were between them and Auradine right now. So we're doing a bigger kind of play with the Auradine machines. We have a whole bunch of the 2880s, the AT2880s now, and that are around that 220, 240 terahash range. Observed 16 to 18, depending on if I have that 220 versus 240. But like on meter observed good rate, and just very reliable. I mean, I've had a 2880 running, at one of the sites now for close to 65 days. No issues, no shutdowns, very solid line. Almost reminds me of like an immersion machine but air cooled, right? Very stable, machine. Couldn't have asked for a better situation where I've had several S21s go down. It's just like, I think the quality control at Bitmain really needs to address some critical issues. We've mentioned this several times to Bitmain. I mean, we're mostly a Bitmain, fleets on almost everything that we had out in our North Carolina facility, close to 6,000 Bitmain machines. I mean, like the amount of issues that we had with the S19 120 Pro Pluses were systemic. I mean, a lot of burn up boards, that kind of stuff. So I think they've had some serious quality issues there. I'm hoping that some of their new stuff, I'm hearing a lot of stuff with the T21s having the same kind of issues, burning up power supplies and stuff. So I think that it's one of those things that Bitmain's going to feel that in this next cycle of replacement as we start to, and what I mean, I look at cycles like at joules per T. Cycle between the 28 through 32s are going out. Those are going away. The guys in the middle between 22, depending on your config, to like 28, which would be your S19K Pros, your XPs, those kind of lanes, little more rock solid on some of those. Like the 104 is one of the best Bitmain machines out there. I've had 104s running for 30 months, no issues.
Yeah.
But like their 120 line, not so good. Their K Pros, I've been having quite a few issues with K Pros, control boards, that kind of thing. And then looking at their newest stuff, their S21, S21 Pros, few of those back, a little better stability. I would say they're better than the 120 issues, but
one question
Canon making a strong one.
I heard some stuff about like the thermal paste having issues on S21s. Did you guys encounter any of that?
So we've had some overheating. I've had several control boards go out, and then we've had like just the fans seem to be dying faster for some reason. But yeah, it's been, I've had, we got 140 S21s back in February of last year, right when they were first kind of coming out. And we've already had some services on those, where I had like the AT 1500 and 2500i Orodynes as an example, and I haven't done anything with them, right? They just worked. Same thing with Canon 1566, right? So, I think that Bitmain in this next cycle, now I don't have a ton of data on the new HK5, HK6 containers with water cools.
Yeah.
But I've heard of some folks having some issues with the original XP water cools, power supplies and stuff on the 3-phase sides going out. But, I think time will tell, but I think they're going to have to really up their game on this next kind of, I call it third core cycle of that S21, S19 range, where, they have some pretty strong competition. And we haven't even talked about WhatsMiner being, typically very solid too. So, that sub 20 joule per T is kind of the new meta, as it were, right? So if you can get your entire fleet over time down to sub 20, I think that's going to be really the 2025 push with some of that capital from the pubcos, and everybody is trying to get their overall footprint under that 20 joules per T, and really extend, that range. What we're seeing with that though is an interesting circumstance, because the 20 joules per T, if I'm fully 20 joules per T on my 4 40-foot containers on our 5 meg location, we're actually only using 4 megawatts because it's gotten more efficient. I'm not using much energy, right? So it's going to get into this very interesting thing to where maybe some of these sites end up expanding another container, and you're just increasing your footprint amount of machines because your power threshold or your obligation on your power, you're going to have to add more machines to that site, right, to make up that difference. So we're already kind of forecasting like, hey, we don't have enough space in the one substation, so we're trying to look at how we're going to handle that, or just give up the fact that we can't use 5 megawatts. But that's an interesting problem to run into, is where you're not using all the power you can be allocated.
Any last thoughts on Orodyne or the block miner coming to market, or even the seal miner for this year? Are you guys going to be testing them?
Yeah. So I haven't been able to see anything with like I know BitDeer's coming out with some stuff, and there's I would say it's a different type of miner. One thing that we've introduced, we have some L7s and L9s on the script side.
Nice.
And a couple of the sites have kind of a cross hedge on script. And then the what is it? Alpha Dex,
Yeah.
DG plus 1 pluses, the 13 and 14 gigahash units. I would say we had a discovery with that. You got to kind of be careful with if you're ramping a lot of them up. So if you take them out of the box, and we found this out the hard way, we have in the back test bench, we essentially have a 208 step down transformer. We have 240 and a handful of the test bench. And then we have a 277 step up transformer here because we want to test 277 here at the shop. Well, that 277 has 23 amps on it. It takes a 30 amp and steps it down to 23. And we can effectively put one machine on there most of the time, but we couldn't technically put 2 machines. As long as they're at like 3,500 watts. Well, those out of the box are supposed to be 35 to 3,900 watts. Well, if you take them out of the box and you just put a pull in them and you hit apply, it will go through a perpetual tune. Well, those things will ramp as high as 4,400 watts.
Oh yeah,
was not stated that would happen. So we actually burned up one of our step up transformers because it actually started pulling about 34 amps. And it was only rated at 23. So it did it, and then it just cooked it. So I would say anybody deploying, and we're going to take this into why this matters is we're taking this in consideration with one of the boxes that we just ordered 206 of them, and we're going to put those into a Bitmain N5 V2. It has a 1600 amp primary breaker with triple 630s. If you do the math on if all of those ramp to 4,400 watts, we're going to cook that cabinet. So it's from a strategic standpoint, you have to take one, we have to make sure that doesn't happen, and 2, kind of put some API, watchers on there to make sure they don't do that. Right. So we've announced it to AlphaDex to say, hey, don't ever ramp these to 4,400, like change your profile, update the firmware. You're going to cook people's farms if they're not coded to, or if they're not, lined up to do that. That's a critical piece to it. So we want to make sure that they're,
you don't want problems with that. That's for sure. Maybe later this year, we'll have to do a show talking about the trade that you can do with Bitcoin mining, where you're going to like flip between different, like investing in script miners versus investing in SHA-256. This is a very good topic as well. As we kind of close out here, I just want to touch on the new year, Trump inaugurations very soon here. Any thoughts on mining Bitcoin in Middle America and just the opportunities going into the next 4 years for Bitcoin?
So I think this is a great, interesting next few years. I'm predicting a few things, and this is when we talk to clients and customers and stuff too, of like, what are the most, I'll tell you the most bullish pieces that I'm looking at that I think are going to happen. We know that there was a bipartisan bill that went through back in the summer. Biden vetoed it. I think that will obviously be resubmitted. We have a different Congress in there partially, right? And we have somebody that I don't think is going to veto it. So what's that reflect or mean for us when you really peel back the stuff that was in there initially? And who knows, it might change some of the stuff in there in that bipartisan bill. But one of the biggest things in there was the ability for the banking industry to participate. And why I know there's a lot of people like screw the banks, whatever, but you got to understand from you got to take in the calculus of part of the biggest hold up for people entering this space to just be a purchaser or a counterparty to buy Bitcoin is the fact that, and I've lost several people this way of like, well, you got to download this app called Coinbase, Edge, whatever unit that you want to use or software that you want to use to buy Bitcoin or company. And you got to KYC AML with them. And they're like, oh, you got to send this information. You got to take a picture of yourself. And they're just like, yeah, well, no, thanks. Right. They're just like very private. I have several people that just don't like to give account numbers for anything. They're just very anti. They still pay in checks, all those kind of things.
Yeah.
But they still use their bank every day. Right. So this is already a pre-vetted entity. They know them. So if the banks get the ability to start being effectively a broker or an exchange for where you could log into your bank account and you can see Bitcoin and say, I could buy Bitcoin on my bank now because I'm logged in. I see my account information, my loans, my whatever else. And now if you have this option to purchase or come and go to and from Bitcoin or some other cryptocurrencies also, I think it changes the entire concept of how much demand's going to be there, right?
Yeah.
If these larger access to unknown retail opportunity, I think will put a heavy demand on Bitcoin. And I mean, if I was an exchange right now, I would be doing everything I can to find some kind of vertical integration with all the banking industry, saying, hey, don't go invent the new wheel. We've been doing it for 10 years. We gave you APIs. We can create you sub accounts. We can keep all your accounts, listed here. We're just the facilitator. You don't have to go out and redo all this infrastructure. We'll provide you all this stuff, right? So then you'd have this kind of connection. And then you gain this organic, non-marketed exposure to Bitcoin. And I think that's one of the biggest bullish cases for it, because it's just a math problem of how many people are there that have bank accounts that can purchase Bitcoin. I think if that bipartisan bill gets through there, that's a critical one. And then obviously strategic reserve will have a level of impact just from a consumer confidence, along with some of the mechanics that come with the acceptance from like a Department of Treasury, U.S. Treasury, I don't call it a blessing, but just that they're participating now. And that's going to change I think the optics and scope from a worldwide standpoint of, well, the U.S. put it in their treasury. Why wouldn't we do this now too? Because I think some folks in countries and thing are kind of on the edge with it, because they're just like, am I going to lose banking relationships across the world? SWIFT, all this stuff. If I start doing this, am I going to be an outcast? Where I think if, as a world large government truly accepts it, then it changes that kind of mantra of their participation. So I think those kind of big, geopolitical aspects to it provide, heavy pull on Bitcoin resources, right? So, numbers go up typically after that. So that changes everything from our models, and just like as a participant, that'll give more people the ability to participate. And now you'll have a lot more of this micro community kind of thing. I think being able to, it'll take what BitAX and some of those smaller individual participation things can do and just amplify it, right? Next thing you'll have like all these different companies making ASUS and NVIDIA making their own Bitcoin miners. It'll open it up.
The BitX community is pretty cool. At first, I was like, what is this? A little over a year ago.
No, I love it's grungy, man. It's great stuff. It reminds me of the old grid seeds, if you remember those.
I do not, but I'm sure you do.
The original script miners. Yeah, they look like the little ring cylinder looking thing with a single fan, copper looking. Those are the grid seeds. They were like the first kind of introduction after the jalapeno Bitcoin ASIC miner, that home jalapeno and that kind of thing. So.
Bits, thanks for joining the Mining Pod. Always great to talk with you. We'll have to have you on again this year to talk about
always, man. Anytime.
But thank you again. And where can people find your YouTube channel?
Yeah, so it's BitsBeTrippin. So if you just Google BitsBeTrippin, you'll find everything. We have a link tree. On X, we're at BitsBeTrippin. But if you just Google us, we're probably the first 4 pages on Google. If you just Google that, you can use ChatGPT, Grok, all of them. They know who we are.
Let's go.
And everything we do.
Everyone knows you. Cool. Thank you so much again, and Happy New Year. Looking forward to catching up with you
my dude.
again here soon.